Before we begin, a quick but important disclaimer. I am not a licensed financial advisor or insurance professional. The information provided in this video is for educational and informational purposes only and should not be considered legal, financial, or insurance advice. Your financial situation is unique, and you should always consult with a qualified and licensed professional before making any decisions about your insurance coverage. You get the email, or maybe it's the letter in the mail with that little clear window, the one you already know is a bill. It's your car insurance renewal. You take a breath, tear it open, and your stomach drops. The price went up. Again, you haven't had an accident. You haven't gotten a single ticket. Your car is a year older, for crying out loud. So why on earth are you paying more money for the exact same thing? You feel that familiar wave of frustration, maybe even anger. You tell yourself, that's it. I'm shopping around this time. You think about spending your Saturday calling different companies, filling out endless online forms, trying to compare apples to oranges with confusing terms like bodily injury liability and uninsured motorist coverage. And then you just pay the bill. Because it's easier. Because you're busy. And because the giant insurance companies with their talking geckos and catchy jingles have spent billions of dollars to make you believe that this is just how it works. But what if I told you that this entire frustrating cycle is built on a fundamental misunderstanding of how the insurance industry actually operates? What if I told you there's a secret weapon that savvy consumers use? A professional whose entire job is to do that dreaded shopping for you, for free, and often find you better coverage for less money. This isn't some gimmick or a one weird trick. It's a well-established but surprisingly underutilized part of the insurance world. The independent auto insurance broker. By the end of this video, you will have a crystal clear understanding of exactly what an insurance broker does, the critical difference between a broker and the agent you see on TV, and most importantly, the powerful pros and the potential cons of using one. We're going to arm you with the knowledge to decide once and for all if a broker is the right move to potentially slash your car insurance bill and get you the peace of mind that you're actually protected, not just paying for a clever commercial. So let's rip the band-aid off. What even is an insurance broker? In the simplest terms, an insurance broker is your personal insurance shopper. They are an independent professional who works for you, not for a single insurance company. This is the absolute key, the most important sentence you will hear in this entire video. Let me say it again. A broker works for you. To understand why this is such a game changer, you need to know about the other two players in the game. First, you have what's called a captive agent. Think of the big names you see with local offices in every town. State Farm, Allstate, Farmers. The agents who work there are captive. They are fantastic people, often deeply involved in their communities, but they can only sell you products from one company, the company whose name is on the door. They're like an employee at a Nike store. They can show you every sneaker Nike makes, they know the products inside and out, but if the best shoe for your foot happens to be made by Adidas, they can't sell it to you. They are loyal to their brand. Then you have the direct writers. These are the giants you hear on the radio every 5 minutes. Geico, Progressive, Liberty Mutual. You deal with them directly, either online or through a call center. There's no local agent. You are doing all the work yourself, navigating their website, choosing your own coverages, and hoping you got it right. Going to a direct writer is like going directly to the New Balance website. You can buy their shoes and only their shoes. Now enter the broker. The broker is not a Nike store or a New Balance website. The broker is like a highly experienced personal shopper at a massive shoe emporium that carries Nike, Adidas, New Balance, Brooks, Asics, you name it. You walk in and say, I'm a runner, I have flat feet, and my budget is $150. Find me the best possible shoe. The personal shopper doesn't care which brand you buy. Their job is to listen to your needs, use their expert knowledge of the entire market, and come back to you with the top 3 options that are the perfect fit for you, explaining the pros and cons of each. That is precisely what an independent insurance broker does for your car insurance. They represent multiple different insurance companies, sometimes dozens of them, including many you've probably never even heard of. They take your specific situation, your car, your driving record, the type of coverage you need, and they shop the entire market on your behalf to find the best combination of price and protection. Now I know what you're thinking. That sounds great, but what's the catch? This personal shopper service has to cost something, right? This is the second biggest misconception, and it stops millions of people from ever even considering a broker. You're thinking, if this person is doing all this work for me, I must have to pay them a fee, which will just cancel out any savings. And that is, in almost all cases, completely wrong. Here's how it actually works. Brokers are paid a commission by the insurance company they place your policy with. It's a percentage of your premium that's already built into the price of the policy, whether you buy it through a broker or directly from the company. Think of it like booking a hotel. You can book a room on Expedia, or you can book it directly on the Marriott website. The price is often the same. Marriott has an agreement to pay Expedia a commission for bringing them a customer. You, the customer, don't pay Expedia an extra fee. The insurance world works in a very similar way. The price a broker can get you from, say, a company like Travelers or the Hartford, is often the exact same price or sometimes even lower than what you could get by going to them directly. The insurance company is happy to pay the broker's commission because the broker is essentially their outsourced sales and service team, saving them a fortune in advertising and customer service costs. So let's be perfectly clear on this because it's crucial. Using a broker does not mean you're paying an extra layer of cost. You are not paying the broker a fee on top of your premium. They are compensated by the insurance carrier on the back end. This means you get the benefit of their expertise, their access to multiple companies, and their personalized service, all without paying extra for it. It fundamentally changes the dynamic. Instead of you spending hours trying to become a temporary insurance expert, you have a licensed professional in your corner, navigating the complex market for you. It's the difference between trying to diagnose yourself on WebMD versus going to an actual doctor. Now that we've cleared up what a broker is and how they get paid, let's get into the real meat of it. The powerful advantages, the reasons why a broker might be the single best financial decision you make this year regarding your car. The first, and arguably the biggest pro, is what I call access to the hidden market. The handful of companies that spend billions on advertising, the Geicos, the Progressives, the State Farms, they represent only a fraction of the total insurance marketplace. There are hundreds of other excellent, financially stable, A-rated insurance companies in the United States that you've likely never heard of because they don't spend their money on Super Bowl commercials. Instead, they choose to distribute their products exclusively through independent brokers. Companies like Chubb, Acuity, Auto Owners, or Erie Insurance. These carriers often cater to specific types of drivers or offer unique coverage options that the big guys don't. Without a broker, you have zero access to these companies. You are fishing in a small pond, completely unaware that there's a massive, fully stocked lake right next door. A broker gives you the key to that lake. They can often find a company that is a perfect, tailor-made fit for your profile, resulting in a rate that the big direct writers simply can't touch. This access alone can be a financial game changer. But what does that access actually mean for you in real dollars and cents? It means that while you might know the 5 or 6 big names you see on TV every commercial break, your broker knows 25, or 50, or more. Many of these are incredible, financially stable insurance companies that simply don't have a billion-dollar advertising budget. They don't have a talking lizard or a goofy emu. Instead, they invest their money into offering competitive rates and rely on a network of independent brokers to bring them the right kind of customers. Think about it. There are companies that specialize in insuring drivers with a less-than-perfect record. There are others that absolutely love insuring classic cars or modified vehicles, offering specialized coverage that a direct writer wouldn't even know how to quote. Some regional carriers focus on specific states, understanding the local risks and driving conditions so well that they can offer rates the national giants can't match. Unless you plan on spending your entire weekend becoming an expert on the regional insurance markets of North America, you'll never find these hidden gems on your own. You can't just Google them because you don't even know their names. This is the broker's secret weapon. They have the map to the buried treasure, and they know exactly which chest holds the gold for someone with your specific needs. This leads us directly to the second major pro of using a broker. They are a one-stop shop. This is a massive, and I mean massive, time and sanity saver. Let's imagine a guy named Mark. Mark is a pretty typical driver, but his situation has a few quirks. He owns a reliable 2018 Honda for his daily commute, but he also has a 1969 Ford Mustang that he lovingly restored. It's his weekend pride and joy. To complicate things, his 17-year-old son just got his license, and Mark, unfortunately, got a speeding ticket about 18 months ago. So Mark decides to shop for new insurance. He sits down at his computer on a Saturday morning, coffee in hand, ready to save some money. He goes to the website of big name company number 1. He spends 15 minutes meticulously entering all his personal information. His address, his date of birth, his social security number, the VIN for his Honda, the estimated mileage, all of it. Then he gets to the second vehicle. He enters the Mustang. The website's little wheel spins and spins, and then, error. Please call for assistance. The site's algorithm just can't handle a classic car. Frustrated, Mark closes the tab. He moves on to big name company number 2. He enters all of his information all over again. Another 15 minutes. This time the site gives him a quote. But it's astronomical. It's clear they're penalizing him heavily for the speeding ticket and treating his teenage son like a professional stunt driver. They've also valued his classic Mustang at a laughably low actual cash value, completely ignoring the restoration work. Mark tries a third and a fourth and a fifth company. Each time he has to re-enter the same information over and over. His name, his address, his driver's license number. He's practically memorized the VINs of both his cars. 2 hours have passed. His coffee is cold. His Saturday is vanishing before his eyes, and all he has to show for it are a few wildly different, sky-high quotes and a growing sense of despair. This is the reality for anyone whose life doesn't fit into a perfect little box. Now let's rewind and imagine Mark made a different choice. Instead of going it alone, he calls an independent insurance broker. He spends 20 minutes on the phone with a real human being. He explains his whole situation. The commuter car, the classic Mustang, the new teenage driver, the old speeding ticket. The broker asks a few clarifying questions, plugs all that information into their specialized software just once and says, "Okay, Mark, I've got everything I need. I'm going to shop this around to about 30 different carriers for you, including a few that specialize in classic cars. I'll get back to you by the end of the day with your top 3 options." Mark hangs up the phone. He goes outside. He enjoys his Saturday. He plays catch with his son. He tinkers with the Mustang. Later that afternoon, his phone rings. It's the broker. They found a company Mark has never heard of, a mid-sized regional carrier. This carrier offers an incredible multi-car discount, a specific agreed value policy for his classic Mustang ensuring it's covered for its full restored worth, a forgiving policy on his single speeding ticket, and a generous good student discount for his son. The final quote is $400 less for a 6-month policy than the cheapest, worst coverage quote Mark found on his own. One phone call, one entry of information, dozens of companies shopped. That is the power of the one-stop shop. You aren't just saving money, you're buying back your most valuable asset, your time. But the broker's value goes even deeper than that. And this brings us to what might be the single most important reason to consider using one, expert advice and advocacy. Your broker is not a call center employee reading from a script. They are a licensed professional. They have to pass state-level exams and complete ongoing education to maintain that license. Their job isn't just to sell you a policy. Their job is to make sure you have the right policy. When you buy insurance direct online, you're on your own. You're presented with a wall of options and jargon. What liability limits should you choose? 25/50/25? 100/300/100? What do those numbers even mean? Do you need uninsured motorist coverage? What about underinsured motorist coverage? Are they the same thing? What's the difference between comprehensive and collision? Do you need rental reimbursement? Towing and labor? The online form will let you choose the absolute state minimum coverage to give you the cheapest possible price. It will flash a big green number on the screen and you'll think, wow, what a deal! But you might be one fender bender away from financial ruin. If you cause an accident and the other driver's medical bills are $80,000, but you only chose the state minimum $25,000 of bodily injury liability, guess who's on the hook for the remaining $55,000? You are. They can go after your savings, your assets, even garnish your future wages. That deal you got online could end up costing you your house. A good broker will never let that happen. They'll look at your financial situation, your income, your assets, what you have to protect, and they will advise you. They'll say, look, for someone in your position, I strongly recommend we increase your liability limits to 100/300. It will only cost you about $10 more a month, but it gives you 12 times the protection. It's the best $10 you'll ever spend. They act as your personal risk consultant. They are your advocate. This relationship becomes even more critical if you ever have to file a claim. When you have a claim with a direct-to-consumer company, you're just a policy number calling a 1-800 number, talking to a different person every time. When you have a claim and you have a broker, you call your broker first. You call the person you know and trust. They will walk you through the process, advise you on the best way to proceed, and even go to bat for you with the insurance company if there are any disputes or delays. They work for you, not for the insurance company. That is a crucial distinction. So to recap the pros, we have unparalleled access to a hidden market of insurance carriers, the incredible time-saving convenience of a one-stop shop, and the invaluable peace of mind that comes from having a licensed professional as your personal advocate. It sounds almost too good to be true, right? And this is where we have to be honest and look at the other side of the coin. Using a broker isn't always the perfect solution for everyone in every situation. There are potential downsides, and the first major con is a bit counterintuitive, given everything we've just discussed. It's the potential for limited options. You're probably thinking, wait a minute, you just spent 10 minutes telling me they have more options. And that's true in general, but it's not universally true. The key thing to understand is that no single broker works with every single insurance company in existence. Every brokerage has a specific set of carriers they are appointed to represent. One broker might have contracts with 30 companies, while another down the street has contracts with a different 25. Furthermore, some of the biggest insurance companies in the country simply do not work with independent brokers at all. These are called captive or direct writers. If you want a quote from them, you have to go to them directly, either online or through one of their own agents. This means that if you rely solely on one broker, you might be missing out on a potentially great rate from a huge direct writer that they don't have access to. It's possible, though not always likely, that one of these direct giants happens to have the absolute best rate for your specific profile, and your broker will never be able to find it for you. Their wide net has a few very specific, and sometimes very large, holes in it. This creates a dilemma for the truly obsessive shopper. And this obsessive shopper, let's call him Dave, is now facing a paradox. He hired an expert to cast the widest possible net, only to discover that some of the biggest fish in the sea deliberately swim around it. So, who are these elusive giants? The companies that a broker simply cannot quote for you. They fall into two main categories, and understanding them is the key to understanding the entire insurance landscape. The first, and perhaps most famous, are the direct-to-consumer writers. Think about the insurance commercials you see 1,000 times a day. The gecko, Flo, the emu, the guys with the Parmesan cheese problem. I'm talking about Geico and Progressive. These companies have built their entire business model on one simple, powerful idea: cutting out the middleman. That middleman is the broker. Here's how it works. A traditional insurance company partners with independent brokers. When a broker sells a policy, the company pays them a commission, usually somewhere between 10% and 15% of your premium, every single year you renew. So on a $2,000 policy, the broker is making $200 to $300. That's their fee for finding you, advising you, and servicing your policy. Decades ago, executives at companies like Geico had a revolutionary thought. What if we took that 15% commission we would have paid a broker, and instead we spend it on something else? What if we spend it on advertising? Billions and billions of dollars in advertising. They decided to use that money to bypass the broker entirely and go straight to you, the consumer. Their goal is to make their brand so inescapable, so ingrained in your mind through endless, catchy commercials, that when you think "I need car insurance," your very first thought is their 800 number or their website. They're making a bet. They're betting that they can acquire you as a customer for less than the 15% commission they would have paid a broker over the life of your policy. And for them, it has paid off on a massive scale. Geico and Progressive are two of the largest auto insurers in the entire country. But because their whole system is designed to avoid paying broker commissions, they will not, under any circumstances, allow an independent broker to sell their products. It's a closed system. If you want a quote from Geico, you have to go to Geico. Period. A broker cannot do it for you. That's hole number one in the net. But there's another, equally massive hole. This group is the captive agent companies. These are the household names like State Farm, Allstate, and Farmers Insurance. These companies also use agents, but with a crucial difference. Their agents are captive. A captive agent is the opposite of an independent broker. They work for one and only one company. Your local State Farm agent can sell you State Farm insurance. That's it. They can't turn around and offer you a quote from Nationwide or Travelers if State Farm's price isn't competitive for you. They are loyal to the mothership. So when you put these two groups together, the direct writers like Geico and the captive agent companies like State Farm and Allstate, you are looking at a colossal chunk of the United States auto insurance market that is completely off-limits to an independent broker. We're talking about nearly half the entire market. Think about that. You could go to the best, most knowledgeable, hardest-working broker in your town, and they would still be fundamentally unable to access quotes for many of the biggest names in the business. If one of those companies happens to offer the most competitive rate for a 35-year-old male driving a Honda according to your specific zip code, your broker will never find it. It is impossible. This is, without a doubt, the single biggest disadvantage of using a broker. You are sacrificing access to a huge portion of the market for the convenience and expertise they provide. And that right there sounds like a deal breaker, doesn't it? Why would you ever limit your options so severely? It seems like going direct and calling every company yourself is the only logical path. But this is where the equation gets complicated, because we've only been talking about one thing, price. And the biggest pro of using a broker has almost nothing to do with the initial price you pay. It has everything to do with what happens after you pay. It's about service, advocacy, and having a professional in your corner when things go horribly wrong. Let's imagine a scenario. You're in a nasty multi-car pileup on the freeway. It's chaotic, police are on the scene, tow trucks are arriving. It's not immediately clear who hit who first. It's the most stressful driving situation imaginable. Now you have to file a claim. If you bought your policy from a direct writer online, what do? You pull up an 800 number on your phone. You'll navigate an automated phone tree, wait on hold, and finally speak to a stranger in a call center that could be hundreds or thousands of miles away. You'll explain your story. That person will enter it into the system and give you a claim number. The next time you call for an update, you will almost certainly speak to a different person, and you'll have to explain your situation all over again, referencing your claim number. You are, for all intents and purposes, a number in a massive faceless system. The people you talk to work for the insurance company. Their loyalty, their training, their entire job is to serve the interests of their employer. Your interests are secondary. Now let's rewind and imagine that same horrible accident, but this time you bought your policy through a local independent broker. What do? You make one call. Not to an 800 number, but to the direct line of your broker, the person you met with, whose name you know. You say, "Sarah, it's me. I've been in a terrible accident." And this is where the magic happens. A good broker immediately shifts from being a salesperson to being your personal advisor and advocate. They will calm you down. They'll tell you exactly what information you need to get at the scene. They will then take your information and officially file the claim with the insurance company on your behalf. They know the claims process inside and out. They know the jargon, they know the potential pitfalls. When the insurance company's claims adjuster calls you, your broker has already prepped you for what to expect. If the adjuster is being difficult or lowballing a settlement, your broker gets on the phone and fights for you. Why? Because their loyalty is to you, not the insurance company. You are their client. The insurance company is just one of the many products they have on the shelf. If one company consistently gives their clients a hard time with claims, a good broker will simply stop selling their policies. Their reputation and their business depend on keeping you, the client, happy. This creates a powerful dynamic. The broker acts as a buffer and a translator between you and the giant, intimidating insurance corporation. They are your fixer. This value is invisible on a quote sheet. You cannot put a price tag on having a dedicated expert in your corner during one of the worst days of your life. For many people, this peace of mind is worth far more than the potential $50 or $100 they might have saved by going with a direct writer who leaves them to fend for themselves. It transforms insurance from a simple commodity you buy online like a toaster into a professional service you hire, like an accountant or a lawyer. So we have this fundamental conflict. On one hand, the direct companies and their captive cousins might, and I stress might, offer a lower price, but they leave you to navigate the treacherous waters of a claim all on your own. On the other hand, a broker provides invaluable expertise and advocacy, but they can't access nearly half of the market to even see if a lower price exists. It's a trade-off between price and service, between access and advocacy. But this dilemma assumes that all insurance policies are the same, that a policy from Company A is identical to one from Company B, and the only difference is the logo and the price. And that is a dangerously false assumption. The actual quality of the insurance itself, the fine print in that 50-page document they send you, varies wildly. And the things your broker understands in that fine print, and that you almost certainly don't, can mean the difference between financial security and absolute financial ruin. Let's imagine two parallel universes. In both, we have a guy named David. David is a 35-year-old graphic designer. He's smart, tech-savvy, and he prides himself on finding the best deals online. He's got a nice car, a 3-year-old SUV he uses for his commute, weekend trips to the mountains, and occasionally to transport some large-format prints for a freelance client. It's a side hustle, nothing major, just a few $100 here and there. In Universa, David does what millions of Americans do. He goes online, compares quotes from a few big-name insurance companies, and picks the one with the lowest premium. He clicks through the options, selects his liability limits, basing them on the state minimums plus a little extra just to be safe, and adds comprehensive and collision. The whole process takes him 15 minutes. He saves a PDF of his policy to his computer, never to be opened again, and feels a sense of accomplishment. He just saved himself $40 a month. He beat the system. One rainy Tuesday afternoon, David is on his way to drop off a set of urgent prints for his freelance client. He stopped at a red light when out of nowhere, a pickup truck slams into him from behind. The impact shoves his SUV into the intersection, where it's T-boned by a van. It's a serious multi-car pileup. David is thankfully okay, just shaken up with a bad case of whiplash, but his SUV is a mangled wreck. The prints for his client are destroyed. The driver of the pickup truck that started it all? He's uninsured and has a suspended license. David isn't worried. He has full coverage. That's what he bought, right? He calls the 1-800 number for his insurance company. After 45 minutes on hold, he gets a claims adjuster. He explains what happened. The adjuster is polite but clinical. He's asked to submit photos, a police report, and a recorded statement. A week later, the nightmare begins. The first call he gets is about his vehicle. The insurance company's appraiser values his 3-year-old SUV at thousands less than what he still owes on his loan. Why? Because David never opted for gap insurance, a detail buried on page 3 of the online checkout process that he'd skipped right over. He's already underwater on his car loan before they even start talking about anything else. Then comes the second call. The adjuster asks him, "Mr. Franklin, what were you doing at the time of the accident?" David honestly replies, "I was delivering some prints for a freelance client." A long pause on the other end of the line. "I see," the adjuster says. "Your personal auto policy contains a business use exclusion. Because you were engaged in commercial activity, we are denying the liability portion of your claim." David's stomach drops. He tries to argue. It was just a side gig. It's not like he's a full-time delivery driver. It doesn't matter. To the insurance company, the fine print is black and white. His policy, the one he bought in 15 minutes to save $40 a month, does not cover him while he's using his car for any business purpose. Not only is he on the hook for his own totaled car and medical bills beyond his personal injury protection limit, but the driver of the van he was pushed into is now suing him for damages and injuries. His full coverage policy won't pay a dime towards that lawsuit. In a matter of weeks, David goes from feeling smart and savvy to facing a 6-figure lawsuit, a mountain of medical debt, and a car loan for a vehicle that no longer exists. He's staring into the abyss of financial ruin, all because of a single clause on page 27 of a policy he never read. Now let's rewind. Let's visit Universe B. In this universe, David is the same guy with the same car and the same side hustle. But instead of going online, he takes a friend's advice and calls an independent insurance broker. Let's call her Maria. The first conversation with Maria isn't 15 minutes. It's an hour. She doesn't just ask for his VIN and driver's license number. She asks about his life. "David, tell me about what you do for a living. Any side work? Do you ever use your car for anything other than commuting or personal errands?" David mentions his freelance graphic design work. "Yeah, sometimes I have to deliver prints to clients. It's not often, but it happens." A light bulb goes on for Maria. This is the kind of detail an online form would never catch. She explains, "Okay, that's a critical piece of information. Most standard personal auto policies will deny a claim if you're using the vehicle for business, even something that seems minor like that. We need to make sure you have a policy with a business use endorsement. It might cost a little more, but it protects you from a massive gap in coverage." She also asks about his car. "Do you still owe money on it?" David says yes. "Okay, we absolutely need to add gap insurance to your policy. If the car is totaled, this will pay the difference between the insurance payout and what you still owe the bank, so you don't end up paying for a car you can't drive." Maria then asks about his assets. "Do you own a home? Have significant savings?" David confirms he does. Maria explains the concept of liability limits in a way he actually understands. She shows him how the state minimums would be wiped out in a single serious accident, leaving his house and savings vulnerable to a lawsuit. She recommends a higher liability limit and an umbrella policy, which is surprisingly affordable, to create a fortress around his financial future. Maria shops his profile to a dozen different insurance companies, including some he's never even heard of that only work through brokers. She comes back not with the absolute cheapest price, but with the best value, a policy from a reputable carrier that includes the business use endorsement, gap insurance, and much higher liability limits, all for about $55 more a month than the bargain basement policy from Universe A. She explains every line item. David understands what he's buying. He feels protected, not just covered. Now fast forward. The same rainy Tuesday. The same horrific accident. In Universe B, David's first call isn't to a faceless 1-800 number. It's to Maria, his broker. He's panicked, but she's calm. David, I am so sorry this happened. The most important thing is, are you okay? Okay, good. Don't worry about the rest. This is what you pay me for. I'm going to handle it. And she does. She reports the claim for him, ensuring it's coded correctly from the start. When the other company's adjuster calls, she tells David to refer them to her. She's his advocate, his bulldog. When the insurance company's appraiser tries to lowball the value of his SUV, Maria is ready. She's already researched the comps in his area and has a counteroffer prepared, backed by data. She negotiates an extra $3,000 for his vehicle. The gap insurance she insisted on covers the rest of his loan, to the penny. When the question of his freelance work comes up, it's a non-issue. Maria simply points to the business use endorsement that's clearly listed on his policy declarations page. The claim is approved without a fight. His medical bills are paid. His car is taken care of. And the lawsuit from the van driver? His high liability limits and umbrella policy provide more than enough coverage. The insurance company's lawyers step in to defend him and handle the settlement. David doesn't have to spend a single night worrying about losing his house. In Universe B, the accident is a terrible, stressful event. But it's a temporary problem, not a permanent catastrophe. It's an insurance claim, not financial ruin. The difference between these two universes wasn't luck. It was a choice. It was the choice to work with a professional who understood that the goal of insurance isn't to find the cheapest price, but to secure the best protection. This story illustrates the single biggest pro of using a broker. You get a personalized expert and an advocate in your corner. They perform a needs analysis that a website algorithm simply can't. They translate the legal jargon of a policy into real-world consequences. And when disaster strikes, they don't just send you a link to a claims portal. They fight for you. They're the human element in an industry that can often feel frustratingly inhuman. They're the guide who knows the map, who can point out the hidden traps and the safe passages. But of course, this is the best-case scenario. This is what happens when you have a good broker. What happens if you get a bad one? And doesn't all this personalized service come with a hefty price tag? How do brokers even get paid? That's where things get a little more complicated, and it's where the potential cons start to appear. Let's start with the biggest question of all, the one that underpins everything else. How do these brokers get paid? It feels like this personalized white glove service must come with a secret astronomical fee, right? You're probably picturing an invoice showing up a month later for consulting services. But in most cases, that's not how it works at all. The vast majority of independent insurance brokers are paid on commission. This commission comes directly from the insurance company, not from you. It's a percentage of the premium you pay for your policy. Think of it like a finder's fee. The insurance company is essentially paying the broker for bringing them a new, qualified customer. This is a critical point to understand. The commission is already baked into the price of the policy, whether you buy it through a broker or, in many cases, directly from the company itself. You are not typically paying an extra, separate fee on top of your premium for the broker's service. This commission structure usually has two parts. First, there's a new business commission, which is a higher percentage paid on the first year of your policy. This incentivizes the broker to go out and find new clients. Then, for every year you renew that policy, the broker receives a smaller renewal commission. This is designed to incentivize them to provide good ongoing service so that you'll stick around. In theory, this system aligns the broker's interests with yours. They want to find you a policy that you're happy with long-term, because they get paid as long as you remain a client. And this is the giant flashing neon sign, but this is also the source of the single biggest potential con of using a broker: the conflict of interest. Because not all insurance companies pay the same commission rates. Let's play this out. Imagine you walk into a broker's office. They run your information and find two excellent options for you. Option A is from Bedrock Insurance. It has fantastic coverage, a great claims reputation, and it costs you $150 a month. Option B is from Summit Assurance. It's also a good policy, maybe the coverage is slightly different or the deductible is a little higher, and it costs you $155 a month. To you, the difference is $5. But behind the scenes, there's another set of numbers. Bedrock Insurance pays the broker a 10% commission. Summit Assurance, trying to be more aggressive and capture more market share, pays a 15% commission. Let's do the math. If the broker sells you the policy from Bedrock, they make $15 a month. If they sell you the policy from Summit, they make over $23 a month. That's more than a 50% raise for the broker, just by steering you towards a policy that costs you slightly more. Over a year, that's nearly a $100 difference in their pocket, from just one client like you. Now multiply that by hundreds of clients. An ethical, professional broker, and there are many of them, will present both options transparently. They'll explain the pros and cons of each, point out why the Bedrock policy is a slightly better value for you, and let you make the choice. They know that building long-term trust is more valuable than an extra $8 a month. But a bad broker? A bad broker sees an opportunity. They might not lie to you outright. They won't say this policy is cheaper when it isn't. But they'll use their position of expertise to frame the more expensive option as the superior choice. They'll say things like, Summit Assurance has a more comprehensive package, or their roadside assistance is top tier. Even if those differences are minimal or irrelevant to your specific needs, they will leverage your trust against you to pad their own bottom line. This is the fundamental risk. You are placing your financial safety in the hands of an advisor whose income is directly tied to the product they recommend. This doesn't mean all brokers are untrustworthy, not by a long shot, but it means you have to be an educated consumer. It means the burden is on you to detect whether your broker is acting as a true advisor or as a salesperson in disguise. This leads directly to the second major con, the potential for a subpar experience. While a great broker is an incredible asset, a bad broker can be an absolute nightmare. A bad broker is one who is slow to return your calls. They forget to shop your rates at renewal time, letting your premium creep up year after year because they're still collecting their renewal commission for doing absolutely nothing. When you have a claim, they're suddenly nowhere to be found, telling you to just call the 800 number on your policy card, completely abdicating the role of advocate they promised you. They might only present you with quotes from 2 or 3 companies, not because they're the best fit, but because they're the companies that pay the highest commissions or offer the biggest year-end bonuses to the agency. You end up with all the downsides of a middleman with none of the promised benefits. The third con is something that might surprise you. Using a broker isn't always the cheapest way to get insurance. It sounds counterintuitive, right? Their whole job is to shop the market for you. But here's the thing. They can only shop the market of companies they have an appointment with, meaning a contractual agreement to sell their products. And some of the biggest names in auto insurance, the ones you see advertising every 5 minutes during the Super Bowl, are direct-to-consumer companies. They have made a strategic business decision to not work with independent brokers. Their business model is built on cutting out the middleman and, in theory, passing those commission savings on to you. So your independent broker can't get you a quote from every single company. If the absolute rock-bottom cheapest rate for your specific profile happens to be with one of those massive direct writers, your broker will never be able to find it for you. They literally don't have access to it. You would only find that price by going online and getting a quote yourself. This creates a trade-off. A broker provides a curated selection from a wide range of excellent carriers, many of whom you've probably never heard of, but who might offer incredible value and service. But they don't represent the entire market. For someone whose number one, and perhaps only priority is paying the absolute minimum possible, a broker might not be the final answer. You might get a better price, but it's not a 100% guarantee. Finally, there's the con of control and speed. In our on-demand world, we're used to instant gratification. You can go online right now, fill out a form, and have a new insurance policy bound and paid for in 15 minutes. With a broker, the process is inherently more analog. You have a conversation. They go and do their research. They come back to you with options. You discuss them. You make a decision. This takes time, hours, or even a day or two. If you just bought a car and need to drive it off the lot in the next 30 minutes, that process can feel painfully slow. Furthermore, you're introducing a layer between you and the insurance company. If you want to make a simple change like adding a new vehicle or changing your address, You can't just log into an app and do it yourself in 30 seconds. You have to call or email your broker. Then you have to wait for them to process the change with the carrier. For people who like to be hands-on and have direct control over their accounts, this can feel inefficient and frustrating. You become dependent on your broker's office hours and their responsiveness. If you need something done at 7 p.m. on a Friday, you're probably out of luck until Monday morning. So we're left with some very serious potential downsides. A payment structure that can create a direct conflict of interest. The risk of getting a lazy or self-interested agent who provides poor service. The fact that they can't access the entire market, meaning you might miss out on the cheapest possible price. And a process that can be slower and gives you less direct control over your own policy. So with all those potential downsides laid out, you might be thinking, why would anyone ever use a broker? And that's a fair question. It sounds like a minefield of potential problems. But the reality is, for millions of drivers, the benefits don't just outweigh the risks. They completely transform the experience of buying and having car insurance. The cons we just talked about are what happens when things go wrong. Now let's talk about what happens when things go right, and why a good broker can be one of the most powerful financial allies you'll ever have. The single biggest, most fundamental advantage of using an independent insurance broker is the power of choice, driven by unbiased advice. Let's break that down. When you call an agent from a big-name company, let's say State Farm or Geico, you're talking to what's called a captive agent. They are a captive of that one company. They can be incredibly knowledgeable, friendly, and helpful. But at the end of the day, they can only sell you one brand of product, their own. It's like walking into a Ford dealership. The salesperson can show you an F-150, a Mustang, or an Explorer. They can tell you all the features, the financing options, and why Ford is the best. But they will never, ever tell you that the Honda CR-V down the street is a more reliable car for your family and is $2,000 cheaper. It's not their job. Their job is to sell you a Ford. An independent broker, on the other hand, isn't a Ford dealership. They are the independent auto consultant who owns the entire car lot. They have the Fords, the Hondas, the Toyotas, the Chevys, and even some obscure brands you've never heard of. Their loyalty isn't to a single car manufacturer. Their loyalty is to you, the buyer. You walk in and say, I need a reliable car for my family of 4. My budget is $30,000, and I value safety above all else. The broker doesn't just point you to one brand. They listen, they analyze, and then they say, okay, based on your needs, let's look at the crash test ratings for the Honda, the fuel economy of the Toyota, and this special financing deal on the Chevy. Here are the pros and cons of each, laid out side by side. That is the fundamental difference. The broker works for you, not the insurance company. Their goal isn't to sell you a specific policy. It's to find the right policy for you, regardless of which company writes it. This immediately shifts the entire dynamic from a sales transaction to a professional consultation. The second massive pro is expertise in navigating complexity. Let's be honest, insurance policies are not designed for easy reading. They are complex legal contracts filled with jargon, exclusions, and clauses that can feel intentionally confusing. What's the difference between comprehensive and collision? Do you need uninsured motorist property damage if you already have collision? What are the state minimums for liability in Texas versus California? And why is just having the minimum a terrible idea for most people? What is stacking? What is personal injury protection, and are you in a state that requires it? It's a nightmare. Trying to figure this out on your own is like trying to diagnose a medical condition using WebMD. You might get it right, but you could also make a catastrophic mistake. A broker is your specialist. They are the translator who turns that dense legalese into plain English. They've spent years learning the ins and outs of these policies. They understand the nuances between a policy from Progressive and one from Travelers that a computer algorithm or a casual consumer would never spot. For example, you might see 2 quotes that look identical in price and coverage. But a good broker might know that Company A has a notoriously difficult claims process, while Company B is known for quick, fair payouts. Or they might know that one company's definition of original equipment manufacturer parts for repairs is much stricter than another's, which could be a huge deal if you have a newer car. This is expert, insider knowledge that you simply cannot get from a comparison website. They don't just find you a cheap price. They find you the right protection, preventing you from being dangerously underinsured without even realizing it. They are your guide through the jungle, ensuring you don't step on any of the hidden snakes. This leads directly into the third major benefit, saving an immense amount of time and hassle. Think about the last time you shopped for car insurance on your own. You probably went to a few major websites, and you filled out the same information over and over and over again. Your name, address, date of birth, your vehicle's VIN, your driving history, your marital status, your education level. Takes at least 10 to 15 minutes per site. If you want to get 5 quotes, you've just burned over an hour of your life doing tedious data entry. And what's your reward? For the next 3 weeks, your phone blows up with calls from numbers you don't recognize, and your email inbox is flooded with an avalanche of "your special quote is waiting" messages. It's a frustrating, time-consuming process, and at the end of it, you're still left trying to compare apples to oranges, wondering if the coverages are truly the same. Now, picture the broker experience. You have one conversation. You provide your information one time. The broker then takes that information and does all the legwork for you. They tap into their network of dozens of insurance carriers and come back to you not with a flood of spam, but with a curated list of the top 3 to 5 options, already vetted and compared. They present it to you on a silver platter, explaining the key differences, the pros and the cons of each. They have already done the hours of research for you. For busy professionals, parents, or anyone who values their time, this service alone is worth its weight in gold. Your time is your most valuable, non-renewable asset. A broker allows you to leverage their expertise to save yours. Fourth, and this is something most people don't think about, is access to niche markets and unique discounts. The giant, household name insurance companies spend billions on advertising to attract the average driver. But what if you're not average? What if you have a unique situation? Maybe you're a delivery driver for DoorDash or Uber, and you need a specific type of commercial coverage that a standard policy doesn't include. Maybe you have a classic 1967 Mustang that needs an agreed value policy, not a standard actual cash value one. Perhaps you have a custom-built truck with thousands of dollars in modifications. Or maybe you have a less than perfect driving record, a couple of tickets or an at-fault accident, and the mainstream companies are quoting you astronomical rates. This is where a broker shines. They have relationships with specialty, non-standard, or niche insurance carriers that don't advertise on TV. These are companies that specifically cater to these unique situations. The average person would never find them on their own. A broker knows exactly which carrier is best for drivers with a DUI, which one specializes in high-performance vehicles, and which one offers the best rates for a young driver with a new license. They are also masters of discount stacking. They know that Company X offers a great multi-policy discount, but Company Y has a fantastic telematics program for safe drivers, and Company Z gives a huge break to members of a certain alumni association. They can strategically place your policy with a carrier that maximizes the discounts you specifically qualify for, saving you money in ways you never would have discovered on your own. Finally, and this might be the most important benefit of all, a broker is your advocate, especially when you need it most, during a claim. When you buy a policy directly from a massive corporation online, you are just a policy number in a database. When you have an accident, you call a 1-800 number and speak to a different person in a call center every time. You are on your own, navigating a stressful and confusing process against a multi-billion-dollar company whose primary financial incentive is to pay out as little as possible. When you have a broker, you have a person. You have a name and a direct phone number. When you get into an accident, your first call isn't to a faceless claims department. It's to your broker. They can walk you through the immediate next steps, advise you on what to say and what not to say, and help you file the claim correctly. More importantly, if the insurance company starts to drag its feet, if they lowball your repair estimate, or if there's a dispute about who was at fault, your broker goes to bat for you. They can escalate the issue, speak to their contacts within the company, and advocate on your behalf to ensure you are treated fairly. They work for you, remember? This transforms insurance from a simple commodity you buy online into a professional relationship. It's the peace of mind of knowing that if the worst happens, you have an expert in your corner, ready to fight for you. And that kind of peace of mind is often priceless. But let's pull back the curtain for a moment. Because while having a dedicated expert in your corner sounds like a perfect solution, the reality isn't always that simple. The world of insurance brokers isn't a magical land free of pitfalls. It's a professional service, and like any service, it comes with its own set of potential downsides and trade-offs that you absolutely need to be aware of before you pick up the phone. Ignoring these cons is like buying a car without ever looking under the hood. You might get a gem or you might get a lemon. So, let's get our hands dirty and examine the other side of the coin. The first and perhaps most surprising con is that a broker might actually have fewer options than you think. Now, this sounds completely counterintuitive. We just spent all this time talking about how they have access to multiple carriers, how they can shop the market for you. And that's true, but here's the critical detail. They don't have access to every carrier. Not even close. Many of the big-name insurance companies you see advertising during the Super Bowl, think Geico, Progressive, Esurance, they operate on a direct-to-consumer model. They've spent billions of dollars building a brand and an online infrastructure specifically so they can cut out the middleman. They don't want to pay a commission to a broker, so they simply don't work with them. If you want a quote from one of these giants, you have to go to their website or call them directly. A broker can't get it for you. Furthermore, even among the companies that do work with brokers, an individual broker or agency won't be appointed to sell for all of them. They typically cultivate relationships with a specific, curated list of carriers. This could be anywhere from 5 to 15 companies. There are good reasons for this. It allows them to build strong relationships, understand the niches of each carrier, and have more leverage when advocating for a client. But for you, the consumer, it means the market they're shopping is not the entire universal market. It's their market, their slice of the pie. So if the absolute best deal for your specific situation happens to be with a company outside of their network, they'll never be able to find it for you. This is why one of the first questions you should always ask a potential broker is, which insurance companies are you appointed with? Their answer will tell you the size of the pond they're fishing in. This leads us directly to the second, and arguably the most important con you need to understand: the potential for bias. Let's talk about the elephant in the room: commissions. How does a broker get paid? You don't write them a separate check for their services. Instead, they receive a commission from the insurance company when they sell you a policy. This commission is a percentage of your premium, and it's paid for the life of that policy. Now, in a perfect world, this is just a fair payment model for a professional service. But we don't live in a perfect world. We live in a world driven by incentives. And the uncomfortable truth is that not all insurance companies pay the same commission rate. One carrier might pay a 10% commission, another might pay 12%, and a third might be running a promotion and offering a 15% commission plus a bonus for new business. So let's imagine a scenario. A broker finds two policies that are a pretty good fit for you. Policy A is from a company that pays a 10% commission. Policy B is from a company that pays 15%. Policy A is arguably a slightly better value for you. Maybe the deductible is a little lower or it includes one extra coverage. But Policy B would put significantly more money in the broker's pocket. Which one do you think they might be tempted to present more favorably? Now I want to be crystal clear. The vast majority of insurance brokers are ethical, hardworking professionals who genuinely want to do what's best for their clients. Their long-term success is built on reputation and referrals, and they know that steering a client wrong for a quick buck is a terrible business strategy. But you cannot ignore the fact that the incentive structure has a built-in potential for a conflict of interest. A less scrupulous broker could absolutely be swayed by a higher commission. They might emphasize the pros of the higher-paying policy, while conveniently downplaying the cons. They might not even show you the lower commission option at all. This is where your own due diligence becomes critical. If a broker seems to be pushing one specific company on you, especially if they can't give you a clear, logical reason why it's superior for your needs, that's a red flag. You have to trust your gut. The third con is about speed, or rather, the lack of it. We live in an age of instant gratification. You can go online right now, fill out a form on a direct insurer's website, and have 5 different quotes in under 10 minutes. You can bind and pay for a policy and have your proof of insurance card in your email inbox before you've even finished your cup of coffee. It's fast. It's efficient. Working with a broker is not that. The process is inherently more analog and human-centric, which means it takes more time. First, you have to have an initial conversation or meeting to discuss your needs. Then you have to wait while the broker takes your information and shops it around to their various carriers. They might need to call underwriters, clarify details, and negotiate terms. This can take hours or even a day or two. Then they'll come back to you with the options they found, and you'll need another conversation to go over the quotes and make a decision. If you're in a situation where time is of the essence, maybe you just bought a car from a private seller and you need insurance right now to legally drive it home, a broker is probably not your best bet. The direct online route will get you on the road faster. The broker process is for those who are willing to trade immediate results for a more thorough, consultative approach. It's a marathon, not a sprint. And for some people, in some situations, that's a deal breaker. Fourth, there's the human element, which can be both a blessing and a curse. When you find a great broker, it's a massive pro. But what if you don't? What if the broker you choose is disorganized, a poor communicator, or just not very good at their job? Unlike a website, which is a standardized system, your entire experience with a broker is dependent on the competence and professionalism of a single individual. A bad broker can be infinitely more frustrating than a confusing website. They might not return your calls in a timely manner. They might forget to submit paperwork, causing a lapse in your coverage. They might give you bad advice that leaves you underinsured. They might be a fantastic salesperson but be completely useless when it comes time to actually help you with a claim. When you hire a broker, you are placing a significant amount of trust in them, and if that trust is misplaced, the consequences can be severe. You're not just buying a product, you're hiring a person, and that means you have to take the time to vet them, check their references and read reviews, just as you would with any other professional you hire to manage an important part of your life. Finally, let's tackle the question of cost in a different way. We've established that brokers can often save you money, but is their service truly free to you? Not exactly. While you don't pay them a direct fee, their commission is, of course, baked into the price of the premium that the insurance company charges. The insurance carrier has to account for that commission in their pricing structure. The argument is that carriers who use the broker channel save money on marketing and advertising, so it all evens out. And often it does. But you can't escape the fundamental business reality that there is an extra layer in the transaction, and that layer needs to be paid. The real question isn't whether the broker is getting paid, but whether the value they provide, the expertise, the time savings, the advocacy, and the access to deals you couldn't find yourself, is worth the portion of your premium that's going to their commission. For many people, the answer is a resounding yes. A good broker earns their commission many times over. But for someone with a very simple, straightforward insurance need, who is comfortable doing their own research, they might find that they can get a slightly better bottom line price by going direct and cutting out that commission layer entirely. It's the classic trade-off. Are you paying for a full-service, guided experience, or do you prefer the no-frills, do-it-yourself model? Neither is inherently wrong, but it's a con if you believe you're getting a professional service for absolutely nothing. The cost is simply built in, not itemized. And this leads directly into another significant potential con, the possibility of bias. Let's be very clear here. The vast majority of insurance brokers are hardworking professionals who genuinely want to find you the best coverage. They build their careers on reputation and referrals. But we have to acknowledge the system they operate in. A broker isn't a volunteer. They're running a business. And the primary way they make money is through commissions paid by the insurance companies themselves. Think about it like this. You walk into a high-end electronics store and ask an employee which television you should buy. They might give you a fantastic recommendation based on your needs. But you also know in the back of your mind that they might be getting a bigger sales bonus or a spiff for selling a Samsung over a Sony, or for pushing the more expensive model with features you'll never use. It doesn't make them a bad person, but it does create a potential conflict of interest. The same principle applies here. The commission structure in the insurance world can be complex. A broker might earn a higher percentage from Company A than from Company B. Company C might offer a big year-end bonus if the broker hits a certain sales volume. Company D might pay a much higher commission for a brand new policy than for simply renewing an existing one. Now, an ethical broker will always present the best option for you, regardless of their personal compensation. But the temptation is always there. If two quotes are very close, say only a few dollars apart per month, could a broker be subtly influenced to recommend the one that pays them a 15% commission over the one that pays 10%? It's human nature. This is where the line between a trusted advisor and a salesperson can get blurry. A great broker acts as your advocate, your partner in protection. A less scrupulous one might act more like a salesperson for the insurance companies that fill their pockets. The difficult part for you, the consumer, is that this is all happening behind the scenes. You don't see the commission agreements. You don't know if one policy pays out $100 more to your broker than another. You are relying entirely on their professional integrity. So how do you navigate this? You ask direct questions. Don't be shy. Ask a potential broker, how are you compensated? Or, do you earn different commission rates from different insurance carriers? A transparent, confident broker will have no problem answering this. They might explain they have standard agreements or that their focus is on long-term client relationships, not short-term commission bumps. If they get defensive or dodge the question, that's a massive red flag. You want an advisor who is on your team, not an agent who is secretly playing for the other side. This brings us to the next major con, which is a bit of a paradox. The whole reason you go to a broker is for more options, right? But the reality is, even the best broker doesn't have access to every option. This is the con of limited market access. Many people assume a broker can pull a quote from every single insurance company in the country. That is simply not true. A broker has contracts with a specific list of carriers. It might be a long list, maybe a dozen, 2 dozen, even more. But it's a finite list. Meanwhile, some of the biggest names in the auto insurance industry have built their entire business model on not using brokers. These are the direct-to-consumer carriers. Think about companies like Geico or Progressive. You see their commercials on TV constantly. Their whole pitch is go to our website, get a quote in 15 minutes and save. They cut out the middleman, the broker, and theoretically pass those savings on to you. They don't pay commissions, which allows them to be more competitive on price in many cases. So, if you go to a broker, no matter how good they are, they literally cannot get you a quote from Geico. It's not in their system. The same is often true for companies that sell primarily through their own captive agents, like State Farm or Allstate. An independent broker can't sell you a State Farm policy. This is a huge deal. It's like using a travel agent who can book you on Delta, United, and American, but can't book you on Southwest Airlines. You might be missing out on the one airline that has the perfect nonstop flight at the best price, and you'd never even know it. It's possible that the absolute best policy for your specific situation, your car, your driving record, your location, is with a direct-to-consumer company. A broker can get you what they believe is the best option within their network, but they can't tell you if a better option exists outside of it. This means that to be a truly savvy insurance shopper, you can't rely 100% on a broker to do all the work. The optimal strategy, if you have the time, is to use a broker as a powerful tool, but not your only tool. Let them shop their network of 20 carriers. They will save you an immense amount of time and effort. But then, take another 30 minutes and get your own quotes directly from the big players the broker can't access. That's how you ensure you're seeing the whole picture. You're combining the broker's expertise and access with your own due diligence. If the broker still comes back with the best overall value, fantastic. You can proceed with confidence. But you might just find that a direct carrier beats their best offer by a significant margin. Without doing that extra step, you're leaving a potentially big blind spot in your search. Finally, let's talk about a con that might seem small, but can be a major factor in today's world. The process can be slower. We live in an age of instant gratification. We want to press a button and have food appear, a car arrive, or a movie start. The direct insurance model caters to this perfectly. You can sit on your couch at 10 p.m. in your pajamas, go to a website, fill out a form, and have a new insurance policy, complete with ID cards sent to your email in under 15 minutes. It's fast, it's efficient, and it's on your schedule. Working with a broker is, by its very nature, a more deliberative and human-centric process. And that means it takes more time. You can't just get an instant quote. The process usually involves an initial phone call or meeting to discuss your needs. The broker then takes that information and goes to work, submitting your application to multiple carriers. They might need to call underwriters, clarify details about your driving history, or negotiate certain terms. Then, they have to wait for the insurance companies to get back to them with quotes. This can take anywhere from a few hours to a few days, depending on the complexity of your situation. Once the broker has the quotes, they'll typically compile them, analyze them for you, and schedule another call to present the best options and give you their recommendation. From start to finish, you might be looking at a multi-day process involving several points of contact. Now, is this a bad thing? Not necessarily. It's a trade-off. You're trading the instant speed of a website for the personalized expertise of a human advisor. For many people, especially those with complex needs like a classic car, a DUI on their record, or multiple homes and vehicles to bundle, this slower, more thorough process is a massive pro. But if your needs are simple and your priority is speed, it can feel like a con. Imagine you're at the car dealership on a Saturday afternoon. You've just found the perfect car, you've agreed on a price, and the finance manager says, "Okay, we just need proof of insurance to let you drive it off the lot." In that moment, you need insurance right now. You probably don't have time to call a broker, wait for them to shop around, and call you back on Monday. You're going to pull out your phone, go to a direct carrier's website, and get a policy in 10 minutes so you can drive your new car home. In this scenario, the broker's slower, more methodical process is a disadvantage. It's a system built for planning and consultation, not for on-the-spot immediate needs. So you have to ask yourself what you value more: the instant 24/7 convenience of a DIY online platform, or the guided, expert-led process that takes a little more time and patience. And that choice between speed and guidance brings us to the other side of the coin. We've spent a lot of time talking about the immense value a great broker can provide. The savings, the expertise, the peace of mind. It sounds almost too good to be true, right? And whenever something sounds too good to be true, it's our job to dig a little deeper and ask, what's the catch? What are the hidden trade-offs? The potential downsides that you need to be aware of before you hand over the keys to your financial protection. The first, and arguably the most significant con, is that the human element is a double-edged sword. A fantastic, experienced, and ethical broker is worth their weight in gold. But a bad one? A bad one can be an absolute nightmare. Think about it. You're placing an immense amount of trust in this one person. You're trusting their knowledge, their experience, and most importantly, their integrity. If you end up with a broker who is inexperienced, they might not know about that niche carrier that's perfect for you. If they're lazy or overworked, they might only check with 2 or 3 of their favorite carriers instead of doing a comprehensive market sweep. And worse, what if they're just not a great fit for you? What if their communication style is abrasive? Or they're slow to respond? You're not just buying a policy. You're entering into a professional relationship. And just like any relationship, if the chemistry is off, the entire experience can be frustrating. Finding a good broker is a lot like finding a good mechanic or a good doctor. You often have to rely on word of mouth, read reviews, and maybe even interview a couple of them before you find someone you genuinely trust. This adds another layer of work to the process, which is something to consider if you're looking for a quick and simple solution. The promise of a broker is that they do the work for you, but the reality is you have to do the work to find the right broker first. The second major con, and this is a big one that many people don't realize, is the illusion of the whole market. Brokers will tell you they can shop the entire market for you, and for the most part they have access to a very wide range of carriers. But wide is not the same as all. No single broker has a contract with every single insurance company in the United States. It's just not possible. Some of the biggest direct-to-consumer companies, the ones you see advertising on TV every 5 minutes, often don't work with independent brokers at all. They've built their entire business model around cutting out the middleman. So, when a broker says they're shopping the market, what they really mean is they're shopping the market of carriers they have an appointment with. It's still a huge number. Far more than you could ever contact on your own. But it's not infinite. There's a chance, however small, that your absolute best rate might be with a direct carrier that your broker simply doesn't have access to. A good broker will be transparent about this. They might even tell you, hey, I found you a great rate at X, but you might also want to get a quick online quote from company Y, as I can't write policies for them. A less scrupulous broker might just present their best option as the best option, period. This is why even if you use a broker, doing a quick 10-minute online check with a major direct carrier can be a smart final step, just to ensure you're not leaving any money on the table. This leads us directly to the third con, the potential for misaligned incentives. Let's be clear, the vast majority of insurance brokers are hardworking professionals who want the best for their clients. Their long-term success depends on building a book of happy, loyal customers who renew year after year. However, we have to acknowledge the system they work in. Brokers are paid on commission. This commission is typically a percentage of your premium, paid to them by the insurance company. This means 2 things. First, the more expensive your policy, the more they get paid. And second, different insurance companies might pay different commission rates. Now again, ethical brokers will not let this influence their recommendation. They know that saving you $100 and earning your trust for life is far more valuable than making an extra $10 in commission this year. But the potential for a conflict of interest is there. Is it possible a broker might subtly nudge you towards the carrier that pays them a 15% commission over the one that only pays 12%, even if the prices are similar? It's possible. The industry has regulations to prevent this, but it's a structural reality of the commission-based model. It puts the onus back on you, the consumer, to ask questions. You can and should ask your broker how they are compensated. Ask them why they are recommending one carrier over another. A great broker will have no problem explaining their reasoning, focusing on coverage, service, and value, not just price. If they get defensive about that question, that's a red flag. The fourth con is a practical one we've already touched on, the communication gap. When you work directly with an insurance company, you usually have a login to an online portal or a mobile app. Need to add a new car at 10 p.m. on a Saturday? You can probably log in, add the vehicle, print a temporary insurance card, and be legally covered in under 15 minutes. Need to change your address or update your payment information? It's a few clicks away. With a broker, you introduce a human layer into that process. You can't just log in and make a change. You have to contact your broker. You send an email or leave a voicemail. Then you have to wait for them to see it, process the change with the carrier on their end, and then send you a confirmation. During business hours with a responsive broker, this might only take an hour. But what if it's after 5 p.m. on a Friday? Or what if your broker is on vacation? Most brokerages have backup systems and other staff who can help, but it's still not the instant 24/7 self-service that many of us have become accustomed to in the digital age. This friction can be a real source of frustration if your needs are often immediate, or you prefer to manage things on your own schedule. It's the classic trade-off between full service and self-service. So let's put it all together. Using a broker isn't a magic bullet. You're introducing a dependency on a single person or agency, and the quality of your experience hinges entirely on their competence and integrity. You might not get access to 100% of the market, including some major direct carriers. There's a built-in, commission-based incentive structure that, while usually not a problem, is something to be aware of. And you're giving up the instant, on-demand self-service capabilities that come with going direct. These aren't deal breakers for everyone. For many people, these trade-offs are more than worth it for the expert guidance and long-term value a broker provides. But they are crucial factors to weigh in your decision. Paints a much clearer picture. On one side, you have the direct route. It's fast, it's transparent, you're in total control, but you're also completely on your own. You're the pilot, the navigator, and the mechanic. On the other side, you have the broker route. You get an expert co-pilot to guide you, handle the complexities, and advocate for you, but you give up some control, some speed, and your journey is dependent on their skill. For years, those were the only two options on the menu: the lonely DIY path or the guided full-service path. But the game is changing, and what most people don't realize is that a third option has started to emerge: a hybrid model that aims to give you the best of both worlds. It combines the power of technology with the wisdom of human expertise in a way that just wasn't possible a decade ago. And understanding this third way might just be the key to making the perfect choice for you. But even before we get to that, there is one final critical question you must ask yourself. It's a question that has nothing to do with price or coverage or brokers or companies. It has everything to do with you. And your answer to this single question will instantly tell you which path you should take. And that ultimate, final question is this: what is your most valuable asset? Is it your money? Or is it your time? Everything else flows from your answer to that. This isn't a trick question. There's no right or wrong answer. A person who says my money isn't greedy, and a person who says my time isn't lazy. It's about personal philosophy. It's about how you choose to navigate the complexities of modern life. Your answer is your compass, and it will point you directly to the right path for you. Let's break this down. If your answer is my money, then you are, at your core, a hands-on manager of your own life. You believe that no one will ever care about your dollars as much as you do. You're the person who changes their own oil, not because you can't afford a mechanic, but because you want it done right and you know you can save $20 doing it yourself. You're the person who builds their own computer, meticulously picking out each component, not because you can't buy one off the shelf, but because you want maximum performance for every single dollar spent. For you, the idea of paying a commission, even an indirect one, to a middleman feels inefficient. It's a tax on a process you are perfectly capable of handling yourself. The time it takes to research 10 different insurance companies online isn't a chore. It's an investment. It's an act of taking control. You see that 4 or 5 hours spent in front of a screen not as lost time, but as money earned, the money you save by finding the absolute best deal without anyone else's help. You aren't intimidated by insurance jargon. You see it as a puzzle to be solved. You'll open multiple tabs, compare liability limits, dissect the meaning of comprehensive versus collision, and understand exactly what you're buying. You want a direct line to the insurance company. If there's a problem with your bill or a question about your policy, you want to talk to the source. You don't want your message relayed through a third party. For you, control is paramount. The direct-to-consumer model was built for you. It empowers you, it respects your intelligence, and it allows you to be the master of your own financial ship. The potential downsides of a broker, the limited carrier options, the potential for biased advice, the extra layer of communication, are not risks you're willing to take. You trust your own judgment above all else. this sounds like you, your path is clear. Go direct. Use the online tools, make the calls, and take command. You will likely end up with a result that you are more satisfied with because you built it yourself. Now let's look at the other side of the coin. If your answer to the question was my time, you operate on a different but equally valid principle. You understand that time is the one resource you can never get back. You can always earn more money, but you can never create more minutes in a day. You are the high-level delegator. You're the small business owner who hires an accountant, not because you can't do your own books, but because your time is better spent growing the business. You're the busy professional who hires a financial advisor, not because you can't pick stocks, but because you know an expert's guidance and management will yield better long-term results and, more importantly, give you peace of mind. For you, the idea of spending a weekend navigating a dozen different insurance websites, filling out the same information over and over, and trying to make an apples-to-apples comparison is a nightmare. It's a monumental waste of your most precious asset. The commission a broker earns isn't an expense, it's an investment. You are not paying for a quote. You are paying for expertise, for advocacy, and for the reclamation of your own time. You are buying back your Saturday. You see a complex insurance policy not as an interesting puzzle, but as a potential minefield. You know that one missed detail, one misunderstood clause, could cost you thousands of dollars down the line. You don't want to become a temporary insurance expert. You want to leverage the knowledge of someone who is a permanent insurance expert. You want a guide, a translator who can take the convoluted language of the industry and distill it into a simple, actionable choice. You want a single point of contact. When you have a question, you make one call. When you have a claim, you have an ally in your corner, someone who works for you, not the insurance company, to make sure you're treated fairly. The potential downsides of going direct, the hours of research, the risk of choosing inadequate coverage, the hassle of dealing with a giant call center during a claim, are precisely the headaches you are willing to pay to avoid. If this resonates with you, if you see your time as your ultimate currency, then your path is equally clear. You should use a broker. Find a good, independent agent who can become your trusted advisor. The value they provide will, for you, far outweigh the cost. Let's make this even more real. Picture two people. First, there's Jessica. Jessica is a data analyst. Her brain thrives on spreadsheets, comparisons, and optimization. On a Saturday morning, she pours a cup of coffee, opens her laptop, and creates a detailed spreadsheet. In column A, she lists 10 different insurance companies. The next columns are for bodily injury liability, property damage, uninsured motorist, collision deductible, comprehensive deductible, and annual premium. For her, this is fun. She methodically gets quotes from each company's website, plugging in the numbers. She discovers that by increasing her deductible from $500 to $1,000 on Company X, she saves $220 a year, a 22% return on her increased risk. She finds that Company Y offers accident forgiveness after 3 years, not 5. This is information she trusts because she found it herself. For Jessica, a broker would just be in the way. She is the ultimate DIYer. Then there's Tom. Tom runs a successful contracting business and has 3 kids. His Saturdays are a whirlwind of soccer games, trips to the hardware store, and family time. The absolute last thing he wants to do is sit in front of a computer comparing insurance quotes. He knows he needs good coverage, especially with a work truck and a family minivan, but the thought of it is exhausting. So he calls an independent broker his friend recommended. He spends 20 minutes on the phone explaining his situation. 2 days later, the broker calls back. She says, "Tom, I've shopped your policy with 15 different carriers. Here are the top 3 options. Option A is the cheapest, but the liability limits are a little low for a business owner. Option B is the best value. It has great coverage and a company known for fantastic claims service. Option C has the highest coverage, including a commercial rider for your truck, for just a bit more." Tom asks a few questions, and in 10 minutes he makes an informed decision. The broker handles all the paperwork. Tom just saved himself an entire weekend of stress and uncertainty. He didn't just buy insurance. He bought expertise, simplicity, and freedom. Tom is the ultimate delegator. So who are you? Are you Jessica? Or are you Tom? Of course, most of us are somewhere in the middle. Maybe you're a bit of both. And for you, a hybrid approach might be best. Perhaps you spend an hour doing your own online research to get a baseline premium from a couple of the big direct writers. You get a feel for the market. Then, armed with that information, you call an independent broker. You can say, "Here's the best quote I found on my own. Can you beat it? Or can you explain why I should pay more for what you're offering? This is the ultimate power move. You're combining the control of the DIY approach with the expertise of the done-for-you model. You're using both systems to your advantage. In the end, there is no monster behind the curtain. Direct-to-consumer insurance companies aren't scams, and insurance brokers aren't obsolete relics. They are two different systems designed for two different types of consumers. One is a highway that lets you drive as fast as you want, but you have to navigate it yourself. The other is a guided tour bus. It might make a few stops you wouldn't, but it gets you to your destination safely and without you having to read the map. The choice isn't about which is better. The choice is about which is better for you. It all comes back to that one simple personal question. How do you value your money and how do you value your time? Take a minute right now after this video ends and give yourself an honest answer. Don't think about what you should do or what your friend does. Think about your life, your personality, your priorities. Once you have that answer, you won't need a YouTube video to tell you what to do. You'll already know.